It appears to me that Elon Musk wants all Tesla stock investors to see and then understand this Tesla valuation model. Elon said, "You understand, but few do." That was in response to a tweet from James Damel, which quoted a tweet from CERN. So let's go through this whole Tesla valuation model. A nicely constructed and explained napkin math valuation for Tesla's FSD in the reference tweet below. You might prefer different assumptions, but conservative numbers give FSD a valuation that is 10 times the value of just selling cars. The assumptions in the model below are modest. I'm looking forward to seeing them. You can construct reasonable scenarios that produce even higher value. When FSD is delivered as a product, this is what will happen. That's very strong wording. Not what might happen, but this is what will happen. For it to not happen, Tesla would have to become unable to make cars, or FSD would have to be technically impossible. Competition doesn't matter because the market cannot be saturated in the next 2 decades. It's quasi-infinite. Why don't we see more discussion of this looming transition? Because the numbers are nutty. And serious people don't talk about nutty things. Mainstream pundits and analysts can't afford to seem nutty, so FSD gets ignored with the justification that it's too speculative. Well, it's a good thing that Elon can be quite nutty then, right? But this isn't a difficult truth to uncover. There are hundreds of thousands of vehicles out there using development versions of this technology, and the progress is clear. It's happening and we are getting close. Buckle up now. This is the tweet that James was referencing. Let's have some fun valuing Tesla FSD plus autonomy. Introducing the CERN model for Tesla, a conceived estimate of robotaxi network. Let's look at just the potential value of full self-driving FSD software plus autonomy. Note I say potential as this isn't a company valuation model and these are not predictions. The purpose is simply to show what if. The CERN model shows what if values for Tesla FSD plus autonomy of 329 billion today and 9.4 trillion in 2035, 10xing the stock basically in 12 years or so. In other words, every new vehicle sold, which expands Tesla's potential fleet, adds $72,000 to the CERN model for Tesla, and yet Wall Street is worried about today's margins. This is what Elon Musk means when he says the value of the company is primarily on the basis of autonomy. That's really, I think, the main driver of our value. Let's see how we arrive at these numbers. Here are the assumptions. Number 1, Tesla sells their vehicles at cost and only makes money from FSD software subscriptions and robotaxi revenue. Number 2, Tesla has sold a cumulative 4.9 million vehicles as of 2023 Q2 and will sell a cumulative 130 million vehicles by the end of 2035. 19 million in that year in 2035, 5 years later, and 1 million less than the company's 20 million target by 2030. These vehicles are considered to be the fleet. So basically he assumes that by 2035 we'll be selling 19 million vehicles per year. Number 3, the CERN model excludes all other revenue from energy, insurance, supercharging service, dojo, and bots. So this is pretty much just the value from full self-driving only. All vehicles, number 4, subscribe to FSD, no purchases, and the cost of monthly FSD subscriptions are $200. Now, in the real world, you will never have 100% of people take FSD unless Tesla actually requires you to purchase full self-driving together with the vehicle. In that case, maybe we could get there. And realistically, we could still get fairly close to 100% if full self-driving really works and if it's much safer than human driving. Also, there is a possibility, but this I think would be much later than 2035, where the governments would start to mandate everyone to have something like full self-driving technology in their own vehicles so that you have perfect or close to perfect safety, because human drivers would be not safe on the road, inevitably causing accidents. Now, I don't think that is likely to happen in the US. Probably other countries would start that first, but it is also something to think about. Number 5, autonomous vehicles drive 60,000 miles per year generate 30 cents per mile in revenue, and Tesla takes 25% of the fleet revenue. Now, a few more things to think about. How many miles do the cars drive that are actually miles that you will be paid for? Because if cars are picking up passengers, not every single mile is with a passenger inside the vehicle. Sometimes you have to just drive around to just get the passenger, and also you need to go drive charge and do service and things like that. Number 6, net profit margins over time are 35%. Number 7, and investors give the company a PE multiple of 30 for steady growing high margin earnings. You can change that to 20 or even 15 if you want to be really conservative. None of the numbers in the model are discounted to the present. So that's important to remember. The model's results. FSD, based on today's fleet size, annual potential FSD revenue is 11 billion. By 2035, potential FSD revenue would rise to more than 300 billion. Autonomy, based on today's fleet size, annual potential revenue from autonomy is 20 billion. By 2035, potential FSD autonomy revenue would climb to 580 billion. Combined annual potential FSD and autonomy revenue based on today's fleet size is 31 billion. By 2035, potential FSD and autonomy revenue would expand to 895 billion. Applying a net profit margin of 35% and an earnings multiple of 30 to those revenue figures gives us a CERN model what if value of 329 billion today and a what if value of 9.4 trillion in 2035, basically 10xing Tesla stock by 2035. For comparison, Tesla's total market capitalization today is around 850 billion. And remember, the numbers that he's giving you are just based on FSD, assuming that Tesla makes zero money on actual hardware, which is not the case at all today. Tesla makes a lot of money just selling cars alone. Finally, from Elon, the short-term variances in gross margins and profitability really are minor relative to the long-term picture. Autonomy will make all of these numbers look silly. And then he has a chart which shows how Tesla's market cap would scale. One thing that we can almost certainly know for sure is that not every single vehicle in the fleet is going to be a robotaxi. These calculations would assume that literally every single Tesla, including the Tesla that I have currently, would be a robotaxi, but I probably actually wouldn't want to do that because I just want to use the car for myself. I don't want it to be dirty when I use the car. I just don't want the extra hassle. I would probably try it just to see how it works, but because I'm in a pretty good financial situation, it's not all that likely that I would put my Tesla on the Tesla fleet, because I just want that extra comfort where we don't need to worry about not leaving any of our things in the vehicle. We would certainly need to clean the car. Sometimes it would, I guess, get dirty if we have someone who's, let's say it just rains and then the car gets dirty inside also, or someone brings a drink and then spills it inside the car. Now you got to clean it up. Someone eats inside and drops something. You got to clean that up. Well, I think most people, or many people certainly, will prefer to put their vehicle on the robotaxi network. There will be quite a few that will not. And by the way, he agrees with that as well. Number 2, there is a good chance that the price of an FSD subscription is different than $200 per month. It could be more, it could be less. At least at first, it is likely to be quite a bit more. And then as the business scales, the price eventually will probably start to come down a little bit because we will reach saturation. But when exactly that will happen is the big question. Number 3, the assumption for the number of autonomous miles driven per year per vehicle could be more or less than 60,000. Number 4, the revenue per mile assumption of 30 cents per mile could be more or less. ARK Invest assumes a long run revenue per mile of 25 cents. I think in the beginning, it'll probably be quite a bit higher, and then it will start to come down a lot. Number 5, the fleet size of 430 million vehicles could be high. How many vehicles will Tesla sell between now and 2025? Then again, the fleet size could be low if Tesla licenses FSD to other automakers. I think the question about the fleet size also largely depends on when exactly will Tesla solve full self-driving, because think about this. Investors would go crazy if Tesla all of a sudden started losing, let's say, 5% with every single vehicle sold. Right now, Tesla makes money, and I don't think any investor would want to lose money. However, if Tesla solves full self-driving, and if Tesla sells a full self-driving package with every single car pretty much, the hardware, Tesla can lose money just by making hardware. Let's say we can lose 10% easily. That would allow Tesla to manufacture vehicles much faster also, because it means we can build factories much faster and not worry about efficiency and just worry about speed mostly, for example. Number 6, what will Tesla's take rate from autonomy be? Is 25% too low? He means when Tesla has the network, sort of like Uber, but for robotaxis, what's the percentage of revenues that Tesla will take from other robotaxi operators? I think 25% is fairly reasonable. 30% would be a very high number, but still possible. Number 7, what will their net profit margin be once FSD subscriptions and autonomy revenue is flowing through the income statement at scale? And number 8, earnings multiples. Obviously, this depends on investors' mood, but what multiple of earnings would you pay? I think if you want to be more conservative, just give it a multiple of 20. And if you want to be really conservative, 15. But if the business is still growing a lot, I think 30 would actually be quite realistic. That tweet is starting a pretty big discussion. There's a lot of people commenting on the tweet as well. Maybe I'll talk about that a little bit more in the next video. And for now, this is the next video that YouTube wants you to watch. And this is an Elon Musk interview, which if you haven't finished watching, you should watch this one next. My name is Matt Posius. Like and subscribe if you haven't yet, and I will see you in the next video. Thank you so much for watching.